at some point, the actual physical demand for the metal will overwhelm this electronic market.
They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew Maguire.
Welcome to Live from the Vault.
Hi there, my name is Shane Moran, and I'll be your host for this week's episode of Live from the Vault, and welcome to the show that goes beyond the headlines and uncovers the truth about the precious metals industry and the effects on the global economy in these historic times. With exclusive access to experts and insiders, we reveal information and insights that you simply won't find anywhere else. Now, this week, we have the one and only Andrew Maguire, precious metals expert and whistleblower in the vault. And to help him pull back the curtain, we'll be joined by a first-time guest in the vault and by popular demand from you, our Live from the Vault community, Ron Branstetter of Ron's Basement. That's right, Ron Branstetter's in the vault, and you're not going to want to miss this conversation. So just before we introduce you to our special guest and head over to the UK, please help keep spreading the word about this channel by hitting that like button right there and share it out. And also, if you haven't already subscribed, you can do that right now. And if you hit that bell right there, we'll notify you as each episode goes live. Now, for those who have not met Ron Branstetter, he hosts a YouTube channel named Ron's Basement. And you guessed it, his channel topic is gold and silver in the USA. And an increasing number of USA states are introducing bills to recognize gold and silver as money. And with that, let's head over to the UK and talking gold with the one and only Andrew Maguire and our special guest, Ron Branstetter. Over to you, Andy.
Well, nice to be with you, Ron. This is the first time for Live from the Vault, and I hope the beginning of many. I know a lot of people have asked for you, and you must have a really good following out there, Ron, so welcome.
Well, thank you, Andrew. It's a great honor to be on your show. I followed you for years as well. I know that you are a wealth of knowledge in the precious metal sector. So thank you on behalf of myself and my audience that I know will be watching this as well.
Brilliant. Look, Ron, you follow, I know, obviously, you follow gold and silver, and you provide, I understand, well, I see that you provide daily updates. So I'm really on what you're seeing, but I can see you also have a particular affinity to silver. And what are you thinking? So I'll start by asking you, what do you think about silver priced at 90 ounces of silver to buy an ounce of gold? What are you thinking?
Oh boy, that's a real hot button with me, Andrew. I can't fathom taking, and I like to use this example. There's 20 American Silver Eagles in one tube, and I just can't fathom taking 4 tubes of American Silver Eagles and 10 additional coins and trading it for 1 ounce of gold. And I love gold, don't get me wrong, but the value proposition in doing that, I think, is just not there. That silver appears to be relative to gold, and I just think in general, very undervalued right now.
In fact, really, probably, we all would probably agree, everyone I've spoken to agrees, it's probably the most undervalued commodity on the planet Earth.
Yeah.
And it's money as well, which is staggering when you think about it.
Yeah, I mean, I'd like to ask you that question. I've heard that silver was actually used as money before gold. That's my understanding, and it still is money to this day, like you say.
Yeah, as you say, it's sterling. So absolutely, that is exactly what it was. And I think as you say, so many people, we're a lot of people that follow us are really interested in what's happening your side of the pond as well. Mm-hmm. And that was a beautiful graphic description there of actually physically taking all of these coins and stacking them up physically and then saying, hang on a minute, am I just getting that one coin back? And it's like that. To me, it's interesting. It's nice that you put it into those kind of terms, because we get so we accept massive numbers. They sort of roll off the tongue. A trillion rolls off the tongue when you can't even fathom the size of what a trillion is. And then we talk about 90 to 1 and we almost accept it. Oh yeah, well it's rubbish, but I mean it's ludicrous though.
Yeah.
And I thank you for drawing attention to that.
And I want to mention as well, I hear different numbers regarding this, but from a mining perspective, it's my understanding, I hear sometimes there's 7 ounces of silver for each 1 ounce of gold, and I've heard it as high as 12 ounces of silver. But no matter what the number is, the amount of silver coming out of the ground relative to gold is not in any way reflected in this 90 to 1 ratio that we see. And on top of that, Andrew, I'll bang my desk here. A lot of the silver that comes out of the ground, well, I think almost all of it at this point is being consumed by industry on top of that. So if you circle back to what you said earlier, that silver is also money, it still is a monetary metal. It's mind-boggling. It's maddening. Andrew, I go a little mad sometimes down here in my basement.
Yeah, not as bad as Bill Murphy. My God, does he gets absolutely incensed and understandably. But I think what is interesting, now we're recording this on the 24th, so please be aware, everyone, that this is where we're recording it. But so essentially, as of Monday, and I think this is interesting because the commodity trading advisors, this group of momentum chasing traders who really are chasing a dot on a screen and can be led by the nose by literally the inverse algo, dollar to silver algo, dollar to gold algo, and they can just be automate these. I call them the useful fools of the cartel, and essentially what they're doing is they look at the silver price and they go, hang on a minute, they just look at the retail price of silver and it looks fairly soft. What they don't know is from a wholesale market perspective, and we just did an episode to really reveal this. Over the weekend and on Monday, we had Indian wholesalers chasing us for 1,000-ounce bars. Now, even though the retail level looks soft, Indian wholesalers usually buy under spot, and they'll do it off the LBMA, and they've got all those different various sources. And I know you know multiple sources where they can get this. Now, here's the thing: they were chasing once they start chasing, and this happens rarely. Once they start chasing the German, Swiss refiners, and are willing to pay over spot for wholesale bars, we know there's a problem. And of course, and there's these CTAs, Ron, I cannot believe it. These CTAs mindlessly chasing this dot on the screen. As you say, 90 to 1 makes no difference to them. It is incredible to me that on the other side of that market, we know that the commercials who are fully aware and are exposed to the T+2 delivery side of the spot markets, we know that they're aware of that. And of course, into this, and again, we've got another sell-off going on here. Pit open to pit close, just quite normal. They're on the long side of this. So who do you think's the ultimate winners of this trade?
Well, I've heard some people say, and you know much more about this than I do, but that at some point, actual physical demand for silver will overwhelm the electronic markets. And I heard this gentleman, Ted Butler, I was reading one of his pieces over the weekend. He mentioned how over the last 3 years, we've had 400 million ounces of silver that have left the COMEX inventories and I guess the LBMA inventory through the SPY ETF. I just think at some point, the actual physical demand for the metal will overwhelm this electronic market. And I'm encouraged to see that we're seeing new markets that are being developed. I'm sure, and again, you know way more about this than I do, but like the Shanghai Gold Exchange, the Shanghai Futures Exchange, which is trading silver, that at some point a new pricing mechanism for silver is developed. Now, You said something that was fascinating to me that I forget about from time to time. I think a lot of individual investors, which would probably, be a big part of our audience right now, right? It's me and Andrew, but there's this third person who's the most important, which is our guest who's joining us. We tend to get really focused in on this smaller segment of the silver market, which is the retail investment side. And right now, as you probably know, at least here in the United States, there's a bit of softening on the retail investment demand side. Premiums are way down. So I think it's easy for a lot of us to think, oh, demand for silver's being crushed. Nobody's buying silver. The price is going to crash. But what you're telling me, which is actually a bigger part of the market, is that on the wholesale side, which is more probably bears more influence over the price, that there actually, at least right now, it appears there is a lot of demand for silver.
Huge, and it's largely Indian demand and Chinese demand, but Indian demand has been insatiable. And you wouldn't believe it if you looked at the charts from 2024 open of trade to now. You wouldn't believe it. The action is so counterintuitive, but we've reached that point where, as I say, rarely do we run into a wholesale supply shortage where the Indian guys, the most savvy traders on the planet Earth, would actually go and pay more than spot and actually chase it, and are chasing not just the wholesalers, not just the refiners, but every wholesaler, every desk I know has had the phone calls. We've had the phone calls. Everyone's had the phone calls. Get it to us. And so that's going to create a situation. And of course, then all of a sudden on Monday, what do we see? The report, I think it was Monday, Tuesday morning when we saw the report from SLV inflow of 503.9 tons of inflows. All of a sudden, well, after all these outflows, I mean, you have to give your head a shake. These guys that are selling silver today, you have to give your head a shake when you actually are that dislocated from what you're trading a market you don't understand, which is amazing to me.
Yeah. And I want to mention with India, what was it? 2022, they imported, I believe it was over 300 million ounces of silver into India. I think it was 330 million. And that represents almost 35 or 40% of the entire mining industry output of silver for the year. I mean, it doesn't make sense. And I'm going to ask your opinion on something as well when it comes to the wholesale market. I've heard a few people lately talk about how China in particular is actually starting to bypass the COMEX and the LBMA and going directly to miners in Mexico and saying, hey, we'll buy your concentrate, we'll buy your ore, we'll buy your doré bars, whatever it may be. Have you heard anything about that?
Absolutely, same in gold, absolutely, and that's been going on for a long time. And I think it's not appreciated because people look at. I think a strange thing happened. Well, but really a psyops operation that began in 2013. Now, if you remember, just the bigger picture here, 2013. If you remember, April 2013, we had some of the LBMA banks. ABN AMRO was the first to write to our clients. In fact, we were the first to publish our client's letter and that says, hey, you can't take delivery of your bullion anymore. We can only cash settle you. This happened in April 2013. And then we saw friction arriving and we saw cracks appearing in the LBMA. And this is the gold market initially. And all of a sudden, we had the presidential meeting that happened 2 days later. And then we had this massive sell-off. Which was 100% orchestrated. But at that very time, we had to get rid of every single US client. Every single client, we were told that if you keep a single US client, we will close all your accounts. You will no longer be able to institutionally trade. So off they went. Where did they go? They ended up in the COMEX, in what we call a casino environment, where because US traders are no longer able to access the 10 times larger over-the-counter delivery markets where technically you buy a spot contract, T+2, you have to have delivery. You get delivery on a T+2 basis. Now, I'm not saying it's exactly at that price, because the more you buy, the more it's all bilaterally settled, but you do spot index, you lock that price. So no longer able to do that, and you're no longer exposed to the physical side of the market, then you start to see how it's evolved, that this bubble, this trading bubble here, where the market making insiders, i.e. the bullion banks, all the bullion banks that we know, still have a footprint in the spot market. They obviously have a footprint in the COMEX. So now you've got this disparity where all of the normal, unless you've got an exemption, which is rare, that means the average CTA is not exposed to the physical markets at all, and is not aware of it, doesn't look at it. And so you can explain, it does explain why we've got this disparity between the two markets. But what is interesting is that shortly after that, I don't remember the exact number, I think it's Rule 503, I can't remember the exact, but CME came in and said, oh, by the way, we're going to now put some halts into the market, into the COMEX market. And so what we'll do is we'll be able to freeze the COMEX market for 5-minute periods and the options market for 3 minutes periods. Oh, but by the way, the same market makers who are trading in the much larger spot delivery markets can still actively trade, whereas the US traders are forbidden from even touching it. Yeah. So it just shows you this thing was constructed to really silo US traders away from what's really going on. And this is where the problems evolve from, Ron, because that's why people make such gross errors. That's why we've got 90-1 in silver, because that's where it's operated from.
Yeah. And you know, when true price discovery does occur, Andrew, it's going to be a great day for silver investors throughout the world, because we have endured, in my case, 2 decades, and in some people even longer number of decades of almost abuse. You know what I think when it breaks, one thing that I'm really interested in is this idea that if the silver price goes up significantly, measured in US dollars or whatever currency, the mining sector, there has been such underinvestment into the silver mining sector. There is no money in the silver mining sector. There are very few exploration projects. There are very few development projects. It's going to take a decade for the silver mining industry to catch up, and this structural undersupply, as if we believe the demand projections, and I know we're talking more on a macro level here, but it could lead to I think once it does break, it could lead to an extended period of time where we have some significantly higher prices in the silver market.
Bang on, Ron, and of course. And this is what every first-tier liquidity provider that we deal with on a wholesale basis is of that opinion. Mm-hmm. And of course, no one's going to push the envelope. I mean, you've got a range, and they're providing, they're buying and selling within a range. But as you say, there comes a tipping point.
Yeah. And
I guess really the tipping point is, people say, well, where do you think it is?
Yeah,
I think it's $35. But and then we will see. Obviously, we're going to see that 2012 gap close into around about 2035 bucks. Into $35. At that point, there, we believe, and many of our first-tier liquidity providers believe that is the last line in the sand, and that once that breaks, the whole thing just falls apart. Mm-hmm. Because at that point there, you're going to have so much sideline money coming in, you're going to have so much short covering, that I think, and again, this is something that we've just done an episode on, is about, forget silver for just 1 millisecond. We're definitely looking at the likelihood of the de-dollarisation process in primarily related to gold coming to a head, where we also see that there's so much physical gold has been accumulated by the Sino-Russia alliance, that you could actually then, they're in a position where multiples of what is owned by the West is owned by the global South, who want to actually desanction themselves. And the gold price revaluation even is for, we believe that Saxo Bank, who is Ole Hansen, and these people are highly respected in my view. These are the people that are very pragmatic. They're not chasing anything. They simply say $3,000 gold is where it should be. And these are very pragmatic people. We also believe that a gold price revaluation, once it's triggered, and it will be triggered, it won't be triggered from the West, it'll be triggered from the East. It'll force every other bank who all have a gold revaluation account to immediately sell and buy back at market and revalue at what will be the price determined by this massive, massive powerhouse. And what's that going to do to silver? And this is the point.
Right.
This is the interesting part. And this is the part that really concentrating on, is that what that will do is implode the ratio trade. It is who in their right mind, there'll be such a scramble to exit that trade, which is really the cause of 90-1. It's ludicrous. I mean, this is where all this synthetic action, nothing real in that ratio trade is not, there's nothing real about it. It's pure synthetics. And you just talked about, lower, it's probably 8-1 is the real sort of level. A revaluation in gold is going to put silver at $200.
Yeah.
Like that. Yeah. Because $35 is going to blow every single technical resistance level out. I mean, it's to me, this is where we're looking in 2024. Mm-hmm. $3,000 gold is going to drag silver up by its socks.
I'm glad you brought that up, because I think silver investors in particular, we focus on a lot of the silver specific fundamentals, but we forget about the fact that, like you said, if gold is revalued, if gold is allowed to get to its natural price, that it will bring silver with it, number one, and that silver, I like to joke around and call silver, gold's the big brother and silver is the overly dramatic little sister or little brother that could really skyrocket. I want to ask your opinion on something else, Andrew, because you brought up this de-dollarisation process. We could talk for hours about what's going on with the BRICS and the BRICS Plus, and I like to say that 1971, President Nixon temporarily took the United States temporarily off the gold standard. Do you think, and I'm stating this in very simplistic terms, but do you think that in, let's say, 2024 or 2026, that China and Russia could force the United States by default, I guess is maybe not the right term, but could force the United States to a certain degree, maybe indirectly, if that makes sense, back onto the gold standard? Does that question compute at all?
Absolutely, and I think we're even looking a little too far out there, because literally, when you think about it, I mean, and we've gone through some empirical evidence there where most people are estimating China's holding between 30,000 and 40,000 tons in reality, because it's monetary. Mm-hmm. Monetary gold doesn't get reported. We had Setzer on a Bloomberg report saying, oh, hang on, the 3.24 trillion that China has, it's double that. The rest of it is parked in the state-held banks in shadow banking operations. Well, we actually believe, and our very, very reliable insiders there have said, a big chunk of that's already being converted into physical gold. Why wouldn't it be? You want to sanction-proof yourself. It started in 2010, 2022, after Russia, the dollar was weaponized against Russia. China really ramped up this de-dollarization process. So they have a huge pool of physical. China can also, and this is, we did an episode back in 2023, which where we were reporting on the Chinese generals and Z talking about, look, we're getting ready for a war. Because they think in long terms, they're not saying immediately. So therefore, the 20,000 tons that Chinese citizens have ordered to be bought through the Shanghai Gold Exchange, we could actually technically access that too. And we'll offer a patriotic lease rate back, and we will give them, they're willing, well, they're not seizing it. It'll never be seized, but we'll offer you a great return. The average Chinese person would say, well, absolutely, as long as I'm getting a return and I've got an assurance from my government that I'll get repaid. So now you've upped it to 60,000 tons. Add in Russia's potential, probable 20,000 tons. You've got 80,000 tons. Why would you have the nuclear option? There'll be no wars. You have the nuclear option of pressing that button and revaluing.
Yeah.
You also have the power to back Glasnev's gold-backed currency, where you've got a multi-trillion-dollar oil trade, energy trade, and you can then back that because you now have the facilities to back that with gold. So this is it's starting to all come together. Mm-hmm. And you have geopolitical escalations. You've got NATO now really strutting their stuff. I'm not taking sides here, but hey, you're talking Russia, you're talking China, you're talking Iran, all this kind of whole complex. It's getting very dangerous out there. And so really, there'll be no nuclear war, but the nuclear option is for them to revalue. That would force every other central bank to revalue and they all have a gold revaluation account, of course, probably about $1,200. So they'll revalue at whatever the price that they determine is what it's going to be. This is the question though. Where does that leave the Fed, mm-hmm. who is the only central bank out there who have 8,133 tons of unaudited and very likely rehypothecated gold? What happens when they are forced to revalue from $42?
Yeah, the United States is dragged kicking and screaming back into the gold standard.
Yep.
It would be like, and correct me if I'm wrong. I like to try to simplify things, but what you're saying is the rest of the world, the majority of the world, could be trading and backing their trade essentially with gold, backing their currency with gold. And they then say to the United States, well, if you want to play with us still, China says, if you want our, products for you to sell at your local Walmart, whatever, well, then you need to play with gold too, because we don't want, the United States is, well, we have this great paper money. It's backed by confidence. And, they say, well, that's great. You can do whatever you want, but what we want is something backed by gold. Does that make sense?
Absolutely. So what, assuming that, and there's too much evidence to suggest there's a problem with that these 8,133 tons haven't been rehypothecated, mm-hmm. Because you only have to take example of Germany being refused in 2013 to even inspect their bullion, taking 7 years initially to return 300 tons. Come on, red flags are flying. If you were a private vault, you'd have been shut down, you'd have been audited, there would have been a problem. So I guess the question is, Ron, is given that there's so much empirical evidence to suggest that there's multiple ownership claims on US Treasury gold, then essentially what's going to happen is if they don't revalue, if they're the only central bank not to revalue, then every other central bank who is wanting to revalue will repatriate every ounce, every ton, every kilo that is still lodged there so that they can do what they should have to do to back their own currencies. And I think if the Fed doesn't revalue, it exposes this rehypothecation. If they do revalue, it stays under the radar. In fact, suddenly you've got $42, suddenly valued at 3,000, 2,500, 3,000, solves a lot of problems, does it not?
Yeah, yep, absolutely. And am I correct that a lot of the major European economies actually own, their central banks own an amount of gold which is reflective of the relative size of their economies to each other in the EU. I'd read that, like Holland and France and Germany, that these central banks, to a certain degree, are almost already preparing for this possibility.
Yeah, it's about 4% relative to GDP. And again, so here we have a situation which this Bloomberg report sets a ex-Treasury official says, well, hang on, there's still over 3 trillion of these unreported shadow bank reserves, which we believe have been converted to physical. Then essentially, what have you got here? You've got a real problem here, because if that is the case, and we sincerely believe it's the case, because this is not a friendly country. We are at odds with these countries. We are technically at war with these countries. Let's not kid ourselves. Then basically it's possible that is a 40% backing to GDP. It is possible relative to these holdings. Now, so then you've got 4% in Europe. Well, look, hang on a minute. A revaluation is the perfect instrument to take control, for the global south to take control without firing a single shot. And I think this is what we're going to see in 2024. And people say, well, I mean, I would have thought initially, before this year started and before this sudden geopolitical escalations, I would have thought maybe another year or so, a couple of years out. Not anymore. I really think this is going to happen. It's going to blindside. And this is why I'm saying to everyone that I speak to, look, from a wealth preservation perspective, how much physical do you own now?
Yeah.
That's all you need to be asking yourself. How much physical?
Yeah. Gold and silver have always been money. I think we, especially in the West, in the United States, we've lived in this 50-year-ish period where what I like to refer to as a monetary mirage. And we've been, I think, given a lot of messages as I'm someone who grew up right here in the middle of the United States, and no one ever taught me about silver and gold. I had to learn about it on my own. But silver and gold have always been money. So as we talk about these major geopolitical, we are in a period of geopolitical turmoil and change, similar to what Putin and Xi said to each other 5-6 months ago, like a period of change like none other in history. Silver and gold have always been there, and I believe will continue to be there and offer this, refuge, wealth preservation, and as this all unfolds, I just want to mention one thing. As you talk about China and we talk about India, they both have populations of 1.4 billion people each. They both have expanding economies. They both have expanding middle class. They both are countries that have I like to say, like an inverse relationship with gold and silver to what we have in the United States. Like here in the United States, I think a lot of gold and silver enthusiasts like myself are kind of, away from the herd. We're not, we're lone wolves, or however you want to say it. Whereas in China and India, people have a much different appreciation. And when we look at the major, macro level changes that are going on in the world, I feel safe with gold and silver.
Absolutely, and I think that it's interesting because I'm really sort of looking at your side of the pond here. Some interesting stuff you've got going on over there, and I think it's funny. I was looking recently, and I'm going to ask you about this legal tender legislation that's going through in your side of the pond. But what's interesting is that all the way back in 2017, Texas repatriated there again. What does it tell you about the trust in the faith in the system if Texas decided to repatriate its gold into its state, obviously to create an alternative to the dollar as well, but for the safety and preservation, they didn't trust where it was sitting.
Right.
So now you've got legal tender legislation, in 6 different states? Can you tell us a bit about that?
We have seen a wave of legislation going across the United States in the last, let's say, 5 or so years, where state by state there are legislative initiatives to allow the state citizens their ability to reclaim. I like to say reclaim because this is in the United States Constitution. Reclaim their right to use silver and gold as legal tender. Right now, probably one of the biggest that's going on is Florida. I like to point out to people that Florida, if it were to separate itself from the United States, would be the 15th largest economy in the world. Texas has made big inroads in this area. They've even talked about starting like an asset-backed digital currency based on silver and gold. But, living here in the United States, Florida and Texas are two states that I would call innovative, and two states that have had, when you compare Texas and Florida to the rest of the country, they've had big increases in population. They've had big increases in their economic activity. And they are just a couple of the states that are kind of pushing this envelope and bringing silver and gold back to their citizens in their ability to use it as legal tender.
It's good that you're drawing attention to this because, again, casting that net out perhaps a little wider than we do. Mm-hmm. And I think it's very, very important that people understand that that it reminds us that gold is money. Yeah. It reminds us that silver is money. And when you've got, it's not just, a few gold bugs talking about stuff. This is states pragmatically, as you say, and it's interesting that you should put it this way, are just reinstating it. Is that what you said?
Yep. I said reclaiming, but that's right, because it's like we said earlier, gold and silver have always been money through all this. It's always been, it was a bedrock foundation of the United States. I mean, the America really became great during the period where we had gold and silver backing our money. It's only been here in the last 50 years that was removed, and yeah, it's not a new thing. It's something that the founding fathers, at great risk to themselves as they were drafting this Constitution, specifically put into the United States Constitution. And if you listen to some of the other luminaries of our country, Thomas Jefferson or Andrew Jackson, they all both spoke out explicitly against the dangers of big banks, central banks. And, I think what's going on right now, because of the states' rights and because of what the founding fathers put into the Constitution, is an opportunity for Americans to kind of reclaim that right. And it is happening. And I mean, it's happening on a state by state basis. So it is very encouraging.
Very powerful too, because it doesn't involve insurrections. It doesn't involve all of the things that are claimed to be all the conspiratorial stuff that let's just say the operators of the system, the current operators of the system, really like to spin. And I think so. This is a simple way to, as you say, I like the word reclaim, because that in fact I shall use that, because that is exactly what it's nothing new. This is simply going back to what your inherent right is. Yeah. And you think that the average, since Nixon took the ability to take to get an exchange, to exchange a weight amount of gold against the dollar. Since he removed that, and of course the COMEX was formed by no coincidence 2 years later to create nothing but synthetic gold. But since then, there's this sort of mindset come in where people go, well, you know what, this gold stuff doesn't pay me anything. Let me chase some stocks. Let me chase some other things. But it really is. It is. interesting because when you contrast that with, for example, in Germany, obviously the Second World War, as we put it, what that did was leave an inherent distrust of money, of cash, of fiat money. And so up until today and right now and all the way since then, the average German employee still has a gold account where some of their wages automatically go into gold. It is something that is done because lesson learned, and it's passed down to the children, the stories of it and the reality of that, having to run through that. So there you've got that. Then you've got the average Indian farmer. And I always say, I've got this picture of him cycling down a dusty road. He's got a couple of coins in his pocket, gold coins, which he's going to use to trade. But at home, kilos, dowries, etc. Now, in a gold price revaluation situation, with the average American owning an ounce, maybe in jewelry, or this is ludicrous. This is scary to think about it. What happens in a revaluation when suddenly you've got an inverse situation where the average rural Indian farmer is incredibly wealthy compared to the average American?
It is. And I think that goes back to what we said earlier, China, India, Russia, the BRICS plus nations, Saudi, right, that they could, drag the United States back into the gold standard. The United States would do it kicking and screaming, as you pointed out, it's the kind of the nuclear option without ever firing a shot. But it, yes, it would be a very interesting scenario that could unfold.
And the Fed being the only central bank, which obviously the Fed run COMEX essentially because of legislation. It doesn't. After Basel III compliance came through on the 1st of January 2023, last year, a year ago, where gold was reclassified as a first-year asset class, it became NSFR compliant, net stable funding requirements, where every liquidity provider now in the 10 times larger physical markets must have physical to back those positions, will and do have physical to back those positions. So, yes, so when you look at the COT report, for example, this is fascinating stuff to me. See the COT report, and it's particularly talking about gold here. And you see, look, there's an embedded net short position that the swap dealers have or the producer merchants have. And then when you realize that, hold on a minute, because this is just the short hedging leg of a long physical position. And yes, they game it. Yes, they can game the CTAs into a range because of it. But essentially, what you're looking at is just half the picture. The other half is a physical position that is actually forced to be in place when Basel, and this is when Basel III legislation was, before it was enacted in November of 2022, was exactly the point when the Bank of International Settlements covered all their 500 tons of historical gold swaps to zero. And yes, there's been a bit of adding back, but it's primarily what we believe is the Fed is actually literally leasing gold into the Bank of International Settlements, but really they're out. So every central bank, so I guess the point I'm trying to make, every central bank except the US is long gold, is positioned for a higher price of gold. The Fed is still betting against gold because it's trying, for the hegemonic reasons, trying to protect the dollar.
Yeah.
So this has created this massive opportunity. And this is, I think, where the trigger gets pulled, because you cannot be the only central bank of all global central banks, and you don't even have a physical gold reserve that you can fight back with. Then, of course, you're going to have to think about going back on the gold standard.
And do you think that the United States will fight it as long as they can, but then when it happens, it will be like almost like an avalanche that occurs.
Yeah, because what's a few billion just to cash settle the cartel members? It can be. I mean, you can stroke a trillion without any problem. So you can square up positions. It'll be the speculators that get thrown under the bus.
Mm-hmm.
This is something that again, I've been looking at exactly what happens to somebody who is trading short or long on the COMEX through a revaluation, and it's the shorts that are going to get nailed, really get nailed. Unlimited losses. But that leads me also to think, you remember MFG, the broker collapse?
Yes.
People forget that brokers are also not anticipating such the revaluation could come, and whatever their formula is fine. I mean, I'm sure, but are they going to survive a gold revaluation if they have a lot of shorts on the books, client shorts on the books? And I think this is the thing that I'm really cautioning on, that anyone and everyone who should go to their broker, and they should demand to see in writing that their funds are segregated.
Yep. Because all we know is what we've experienced, right? I'm 53 years old. So, everything's fine, I like to say, until it isn't. I lived through the tech bubble. I was actually working in the tech field back in the late 90s. Everything was great, and then it wasn't. And so we're so accustomed to this current range, I guess we can call it. Let's talk about silver, right? But the same with gold, with the gold revaluation. That if we look at history, right, we're so used to everything being the way it is. But if we zoom out just a little bit and look at 200 years, 500 years of history, these big events do happen. These, the Dutch ruled the world, the British ruled the world, the Spanish ruled the world, the Romans. These big events do happen, and I don't want to be a doomsayer. I heard someone say recently, I'm not a doomsayer. I just get paid to assess risk, and it feels like the evidence, much of which you've talked about today, and we've talked about, the evidence indicates that we could be in for some interesting times, Andrew.
Ron, bang on, absolutely interesting times, and I think, to be honest, I think this is a privilege to be witnessing this ourselves, because it's a lot of prayers answered, because there's a lot of inequality, and there's a social side to this as well.
Yeah.
And I think it's nice to see. It would be nice to see a more equilibrium situation. And obviously, we know dollar hegemony has been, and military hegemony is. It's time for a balancing, and I think this is where I think gold comes in, because, as you say, we don't need, you can't start a nuclear war. We'll all be dead. I mean,
right?
What nutter, what fool would even think about that? Yes, we're talking about. In fact, we see a build up now. We're going to attack Russia. Oh yes, all of Europe's getting together. And we hear all this all the time. Yeah, it's going to happen in the next year or two. Ludicrous.
Yeah.
I mean, one Russian missile into the south, into a submarine missile into the coastline of the UK. What we see, a 600-meter tidal wave swamp London. I mean, come on. I mean,
right.
Everyone knows that the power of these weapons, and the fallout that's involved, and of course, then everyone shoots at each other. I mean, come on. I mean, honestly, it just amazes me that people actually believe this stuff. There's too much to lose for the people that control the situation. Also are vulnerable to this. So, yeah, I honestly believe the equilibrium is going to be gold, and it will restore normality.
I agree with you 100%, Andrew, and on a very philosophical level, but it's not just philosophical. I believe it to be 100% true if you look at the evidence that history gives us, that when money is tethered to gold and silver, when we have a gold standard and a silver standard, or when gold and silver are used as money, I've heard it said it's much more difficult to go to war, right? You can't just print unlimited funds for unlimited wars, and that also that it allows the average people, this equilibrium you talk about, to accumulate wealth. And this recent spout that we've been through in the West, in the United States, I guess, led by the United States in particular, let's say over the last 20, 30 years, with this just imaginary fiat system and money printing and everything else, we know objectively, we can quantify that the wealth, not segregation, but the wealth disparity has grown significantly. So if you take a step back and think about real money, silver and gold, yes, the proof is there. It leads to more, not pure peace, but much more peaceful coexistence for the people of the world, and a much more equal distribution of wealth as well.
That's what I love about the kind of channel you run, the kind of channels we run here. It's about education.
Yeah.
It really is just about that. And it's about when people have information, and they can have this wealth of information, and then you can then assimilate that in your own mind. In other words, you can take full responsibility for yourself, a fuller responsibility for yourself, because you know a bigger picture to make decisions on. And if that's what we can do, Ron, then I think that's all we can do, because everything else is down to the person who is listening to it, to digest it and act on it.
Yeah.
And to not act on information that really is plausible, is credible, then really it's not really the smartest thing to do.
No. And like we said earlier, Andrew, obviously you're the most important person in the world. I'm the second most important, but the real most important person is the one you were just talking to, and that we've been talking with today, which is our audience, the person who's joining us from somewhere in the world, in the opportunity that they have. I always tell people, listen to me, listen to Andrew Maguire, there's a whole host of other people, and then make up your own mind in terms of what works for you. I will say this, and I know this is true, again, for the person who's joining us today, and I know for your normal audience member on Live from the Vault, the people that I've met in the silver and gold community are overwhelmingly really great, good quality people. Smart, but also fair and honest people. And I've heard that same sentiment echoed from a number of individuals that are, operate in the capacity that we do.
You know what? That says it all, Ron. And I want to thank you very, very much for joining us. I really bless you for all you do. And it's, as I say, you're getting a message out there, which is so critically important. And you do throw a net out there that we can't touch necessarily, but that you touch. And all of those people, and all of these people that we do touch will actually talk to other people, mm-hmm. and say, well, hang on a minute, this and this. What about that? And it's like, so it's all about that. It's all about education. So, but thank you so much for joining us today, Ron. It's been a real buzz. I really look forward to having you back again, because there's a wealth of information here.
Well, it's been an honor, Andrew, and you've been a big part of my education over the years as well. I've always enjoyed listening to you, and so thank you. And I would be more than happy to come back and join you again. Thank you.
We look forward to it, Ron. Thank you so much.
All right. Thank you, Andrew Maguire, and our special guest, Ron Branstetter, for another fascinating discussion. And remember, to all of our community, buy physical, and make sure it's backed 1-to-1, and understand the difference between what Andy affectionately calls the casino paper gold and silver markets and the actual physical gold and silver markets. They're not the same. Don't be fooled. And there you have it. That's all we have for you today on another episode of Live from the Vault. Now, please help keep spreading the word about this channel. You know, when you hit that like button, it really helps the channel. When you share this information out, it really helps the channel. And if you haven't already done so, make sure you subscribe and click on that bell, and we'll notify you as each episode goes live. And with that, we'll see you next time right here on Live from the Vault. See you then.